Lundgreen's Invest has secured a historic quadruple exit for its high-tech defense fund. Following the sale of 4 investments to the Danish defense company Omni Capabilities, the fund's value jumped by as much as 40% in just one day. The good news? This evergreen fund is officially open to new investors with an exit possibility every 6 months. Visit lundgreensinvest.com to know more about this co-investment opportunity. This podcast was recorded on the 1st of July 2026, 10 a.m. CET and 4 p.m. Manila time. We talk about currencies, the Japanese yen touching 4-decade lows and a surprisingly strong US dollar. And we also look at IPO trends in the Philippines, Japan, and the US stock markets. Hello to our listeners. I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgreen, the founding CEO of Lundgreen's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgreen's Investor Insights. Join us as we analyze developments in major economies and financial markets globally.
Hello, Mel. How are you today, and how has your week been so far?
Hi, Peter. Happy first week of July. We just this week released our second quarter China and ASEAN quarterly. And of course, that is our magazine issue that really looks into how the whole global oil supply shock has affected the region. So it's, of course, while there has been some sort of truth achieved, of it's still very much volatile. The situation is really uncertain. So we talk about how countries are coping and how they are likely to fare in the next couple of months. So that's an interesting read available on the Lundgreen's Investor Insights app and website. So yeah, that's what's been keeping us busy here in Manila. What about you, Peter?
We are close to the summer holiday season here in
Woohoo!
the Nordic area of Europe.
Mhm.
We are always a bit earlier than the continental Europeans. But so there's a lot of, as last week, a lot of business to do to take care of, sort of ahead of the people being out. Our new defense company that we founded
Mhm.
for just 10 days ago, we, as our defense fund and our cooperation partner, is taking a lot of attention, a lot of investor interest. So we have quite a few meetings, and money are coming in. So that is of course fascinating. The
Yes.
speed in how it goes is impressive. Yeah, and then congratulations with the magazine. It's one
Yes.
more. Yes, as we publish them on a regular basis. But I have just noticed that the social media where we are moving around is, of course, LinkedIn, and it has within 24 hours gained very high attraction numbers. So this is good.
That's
Um,
great to hear. Yeah.
yeah, it's nice. So a lot of good things going on. Let's dive into a couple of the topics we have on today, sort of that we find interesting, was to look at, and
Mhm.
it's again, as always, topics that are on a whiteboard in our offices when we consider how to value the stock markets to go up or down.
Mhm.
Also, we use it at the same base when we advise bilateral and when we take decisions on behalf of our funds. These are some of the same issues and topics that we discuss here. So
Mhm.
there's no different. It is actually looking a bit into our machine room.
Mhm.
But we will start in Japan, and actually today we will circle a bit around a couple of currencies. And when it's in Japan, then it's of course a yen. Well,
Right. So actually, it's kind of a surprise outlier as far as the basket of Asian currencies are concerned. While the general move is depreciation against the US dollar, the Japanese yen touched a 40-year low. Yes, that's 40. Since its weakest since 1986, the yen is now trading at 162 per US dollar. So that's quite a number that we haven't really seen in a long while. Year to date, the depreciation is about 3.5% already. Of course, it's always a two-pronged story where Japan's manufacturing exports are, of course, priced better with a weaker yen, but at the same time, it is costing consumers and businesses more regarding what they import or buy from outside. A couple of concerns or things that are in play, which is keeping the yen down. Of course, at first glance, it would be easy to point to the rate differential between interest rates in Japan and the US. We do like watching Japan because of how different it's been behaving. Um, while the rest of the world, at least until before the oil crisis from March, um, central banks all over the world are trying to cut interest rates. But the Bank of Japan has been hiking and trying to get out of their negative interest rate regime. And now suddenly they're moving with the rest of the world again because everyone's hiking due to high inflation. So it is one of the factors, but there is some, or if not increased, nervousness regarding public debt. We all know that Japan is one of the most heavily indebted countries globally, and with an expansionary fiscal policy with like bold government spending plans from new Prime Minister Takaichi, it's of course causing more concern regarding the direction of public debt. They've always said that they would try to raise more revenue so that any expansionary policy will not require more borrowing, but that's easier said than done. They did announce very recently an increase in visa fees, but of course, it's not that big as far as other tax sources are concerned. If anything, yes, it will create some additional revenues for the government, but there's also that effect that it could also deter tourist arrivals, or if not capital inflows. It's not
Mm.
really the kindest among countries as far as foreign owned businesses are concerned, all the more if you raise the fees. So yeah,
Mm.
but also the simpler and of course direct reason as well is that the US dollar is simply gaining traction, not just against, of course it's against all of the currencies. We can
Mm.
also point to neighboring countries like the rupiah in India and Indonesia. They are
Mm.
also on depreciation mode. Of course, local conditions are also adding to the uncertainty and therefore contributing to currency weakness. To each
Mm.
his own, but for Japan, it's really a lot about how the government will manage the already very high public debt.
Yeah, it is remarkable, as you say. It is a 40 year low,
Yes.
40 decades low towards the US dollar for the yen. It's a thing. Also, no doubt that we consider this as a nervousness among international investors about the economic policy that the new Japanese government is, how to say, executing. So this is without any doubt a nervousness, increased nervousness about Japan. Uh, on the other side, we could imagine that at some time some investors, particular investors in the stock market, would say, okay, it is a bit Japan is a bit interesting because the currency simply is so low valued, and that makes sort of, let's say, in dollar terms, the
Mhm.
Japanese companies cheaper. That could generate some inflow in the Japanese stock market and get as a foreign investors to make a bet on Japanese
Mhm.
stocks even further. It would be a fair bet, but we argue that you need to see a Japanese yen sort of really down in the knees. As it's not panic like
Yes.
enough yet to try to go for that trade. But it is for people who are sort of active, I would say. We don't call it speculative, but just going for some short-term opportunities. There might be something arising here, certainly. But and it's as for me, I still feel young, yeah. But for almost 40 years ago, when I started in the in the currency market actually as a trainee. I'm grown up with very aggressive intervention from Bank of Japan to keep
Mm-hmm.
the dollar yen rate at at a fairly stable level, no panic, very smooth development. So this is completely different, and that is also seems to be a different approach from the government. And we should remember that it is the government that decides the currency
Yeah.
intervention in case. It is not a central bank. The central bank decides about the monetary policy, but the currency is actually a government issue, typical finance ministry issue.
Mm-hmm.
So this is a very different world. Actually, you can also feel a lot of comments and that people are after all a bit surprised that there's been so far no intervention. But intervention only works if a currency is sort of out of what we could see natural value. This is highly interesting. On the other side, Mel, we have as when we talk about currencies, there
Of
are
course.
always two components involved. That is one currency against the other currency, and that is very different to when we talk about the share in a company because that is a company's value in the stock price. Here we are also observing that the dollar is actually strengthening in general this year so far. Not extremely in 3-4%. A serious dollar weakness last year that we also got here in
Yes.
our company. But we've been arguing for even a further dollar weakness this year, which is unusual following after a very weak dollar trend for 1 year and then to say, okay, it continues. That is unusual. But what we call for is actually concern about the US debt as well. And that is to materialize maybe here in exactly the third quarter that we start today. Uh, and we fear that Trump will simply use public debt to try to fuel the economy a bit. But we also reckon that the stronger dollar is based on a market view that the US economy is doing better than expected. And that is okay. We respect that for sure. But we fear that the market will turn around and Trump would need to do something for the economy ahead of the midterm election. And
Yes,
that
definitely.
yeah.
Especially after very high oil prices that he himself brought upon the American people and actually the rest of the world. This is actually a surprise kind of direction as far as the currency is concerned.
Yeah.
One would think that similar to the weakness of the dollar after the tariff situation last year, it would only bring the dollar down, but yeah,
Mhm.
apparently it is rising quite sustained way over the last couple of months.
Yeah. All in all, interesting. But we will still argue for a reversal. But anyway, maybe not against the yen. That is too. that is a weak case. Yeah. Okay, but extremely interesting movements in the currency market, very much in particular in Japanese yen. Let's stay in the Asian region and actually precisely in the Philippines. Well,
Well, actually, we did write about the Philippines and several roadblocks that's standing in the way of more public listings a couple of magazines ago. And now it's sort of a follow-up to mention that ever since that article came out, there has really not been a listing to date. So that came out last year. Currently, the Philippine Stock Exchange is still did not give birth to a new public company as of 2026, but there is one which dares to go public later this year. It's an online wallet and a payments platform called Gcash. That's the product. The parent company is Mint with a Y, and it's, I guess, the closest logical comparison we can make is it's like the Venmo or the maybe the PayPal in the country. It is gearing up for an October listing, and it is potentially the largest in local history. Not that we are known for large IPOs. It would be a $1.5 billion listing potentially. Um, it is kind of popular. Maybe this would be the baby version of SpaceX as far as collective concern or collective
Yeah.
anticipation is concerned locally. It's yes, it's an online wallet. It's not a bank, so it kind of follows relatively looser regulations compared to an actual bank regulated by the Central Bank of the Philippines. But yeah, it would be, if it materializes, it would be the first IPO this year. The government's or the PSE's target, they wanted four IPOs. So yeah, that's unlikely to happen. And the PSE index is also flat year to date. So there's not
Mm,
really much going on. And the question, of course, is why. The Philippines remains rapidly growing, though not as fast as it did a couple of years back. There's this constant nervousness that's been aggravated by the high oil prices as of late. And really, it's kind of a chicken and egg situation where, oh, the
mm,
capital markets in the Philippines aren't deep enough. So there's
mm,
not
mm,
much to do there. But at the same time, there's not there are no new opportunities or not a lot of new opportunities to join. So if we
mm,
don't have an IPO this year, there's really not much going on. And the question is, will this create a domino effect? Like if Gcash is successful, will others
mm,
follow suit? Probably, but not in droves. Definitely, maybe one or two more will try to use the listing in October as a litmus test and then see from there if they would join the stock market as well, maybe in Q4 or early next year. But it's
mm.
still very far from what our neighbors are seeing. It's typical in Hong Kong or China to see like 10 listings a day. We can't even reach five for the year. So yeah, we have more the listings than market debuts. So there's not a lot of incentive to participate in the stock market, in the domestic stock market currently. So yeah, that's really a question of governance, government regulation as well, and yeah, options, more options.
It would be as a for sort of the regional local perspective. This kind of IPOs are interesting, and
Mm-hmm.
as you mentioned, as Hong Kong is they have a completely different activity level, and that is also when we compare on global level.
Mm-hmm.
And if we stay a bit in Japan as well, as everything seems to be on the lows, yeah. The IP number of IPOs this year is forecasted to be on a 15-year low. As
Yeah.
again, very difficult conditions, and you and I, we have been calling for more IPO activity around the
Yes.
globe. It would be healthy, but we also reckon that there is a increased appetite among some companies to be IPO'd. But
Mm-hmm.
it's and we see sort of it can be in the fintech area, sort of also sort of new tech banks, and again also a bit sort of tech companies like the one in Manila.
Mm-hmm.
The spectrum of IPOs, but it is not that the market is hot, and it's not that the investors are queuing up to get them. That is obvious. As we have seen also within the past months, also the past 14 days, that planned IPOs are they are reconsidered, and it has nothing to do with market volatility to do. So stock market, U.S. stock market is behaving the best since a long time. Yeah.
Mm-hmm.
So there's a lot of tailwind, enough tailwind to support IPOs in the market, but the pricing is sort of maybe making potential investors a bit skeptical. Yeah. So we have a situation where the market is not hot, the stock market is not as hot, so it just can absorb a lot of IPOs at any price. That is obviously. It's my impression that IPOs at the right price would work fine,
Yeah.
and
Will
then
it
and
hold?
then
Yeah.
yeah, yeah, sort of that could work fine. And then people, of course, ask, what about SpaceX? As there was just so much in demand. Yeah, it's a completely different story. There's so much hype. It's a hyped event, and it's impressive made. And what I've seen from across the world, we talked about it also when we had the IPO. Nobody are talking about the pricing. Nobody are talking about if the PE valuation is fine. This was
Mhm.
just exciting to have, and that's the key. So again, the conclusion one more time is if you want to do a successful IPO, as you need to have a fantastic fan mile. Yeah? It's a very new world for classical bankers, I can tell you. So, and it's this is very different.
Mhm.
But I have a conviction that we'll see more of that. As a company, if you want to have a good IPO, you need fans. So it's not just enough to say, okay, yes, this is an interesting PE valuation, and the story needs to be very strong. Somewhat more complicated to make an IPO, and
Another
uh,
layer.
yeah, that's actually a constraint that is a bit maybe a shame. Yeah. Because we need companies to be in the market, and so investors have something to invest in, and we can make new and fresh portfolios, and there's some good ideas coming into the portfolios, not only the old-fashioned companies. No, but there is a lot of things going on there, and it's actually extremely interesting, and we would say it's extremely interesting for investors to dive into and see what are the sort of the key factors behind some of the planned IPOs. Also, why are they all of a sudden in danger? One explanation is now and then also that the founders or the sellers they simply want a too high price. We have seen that when the market is very hot, it is it's very difficult to speak with founders about setting a realistic price. That can be a part of the game again. But this is showing something about the global temperature in the stock market.
Mhm.
So that is why we also pay a lot of attention to it. And again, like today,
Yep.
we have it on the table. Yeah, interesting summer. There will be actually also in the because there are IPOs that are sort
Mhm.
of getting prepared, and that is for sure. If somebody needs some reading while being at the beach, apart from the quarterly magazine from Lundgreen's, then of course studying the IPOs is interesting.
The
Well,
perspective.
so yeah, so it's summertime, but what about the global markets? Is it sunshine again, or how are we doing?
Yes, Peter, there is a bit more sunshine peeking through the clouds, of course. Ever since some clarity or some calm has been introduced regarding the US-Iran conflict, prospects have looked a bit better than where they were in March. But still, uncertainty continues to persist and continues to drive market sentiment. We do see some strength in the US dollar, but yes, we see also that it should or it is likely to return um, to a weakening path later this year. And as far as Asian economies and currencies are concerned, it's likely that there will be continued depreciation for currencies in Asia, but economies, on the other hand, are likely to remain strong in terms of growth, not as fast as we've seen in 2025, but still definitely faster than the Western old economies. Also, some sunshine in stock markets in Asia, but the focus will also be on whether or not these IPOs can present maybe a shiny new toy in space, like the SpaceX story. But yeah, we're looking out for that.
Yeah, of course, that the oil price at least has settled down to the pre-level of Iran US the war conflict is of course positive for many in many aspects. But as we have also discussed about a couple of episodes, there have been some damage, and
Mm-hmm.
for economies that are sort of trending around zero growth or just small growth, some of these damages are extremely difficult to recover. Whereas economies that are at a healthy growth, they recover and will move on. So we will see some tail effects, sort of negative tail effects on the old economies, particularly in Europe, on this account. But in general, there are truckloads of good opportunities out there, particularly still in emerging markets. We do reckon that there could be higher rates also in the US. It's all sort of, it will dampen the sort of very positive outlooks for stock market, but we prefer to be overweighted risk. And this is sort of how we start the summertime. And we will see. But we don't leave the market alone. We will be here every week, as always, of course, in our podcast. Thank you to the audience. Thank you to you, Mel. It was a pleasure.
Thank you, Peter.
Thank you for tuning in. As always, we keep a watchful eye on market shakers and movers. Catch the next episode of Sound Economies with Mel and Peter, a podcast by Lundgreen's Investor Insights. Available on Spotify, YouTube, and wherever you listen to podcasts. Lundgreen's Capital has been in the business of investment advisory and wealth management for over a decade, with our high-performing and multi-awarded funds to show for it. We're taking this to the next level through an IPO in 2 years. Join us in this journey. Visit our website to learn more.